All right, it looks like everybody has joined us today, so we're going to go ahead and begin. My name is Jessica Ballard, and I am with Sageworks Valuation Solutions. Today, our presenters, Paul Wapner and Erin Lively, will be discussing how you can prepare for business growth in valuation services. Next, I would like to introduce our presenters. Oh, actually, sorry. First, we're going to go through how to ask questions. Paul, yep, you can go ahead and move back. So today's webinar will be in listen-only mode, so you won't have to worry about any sound on your end. But if you do have any questions during the webinar, please feel free to ask them through the GoToWebinar panel, and we will do our best to go ahead and answer those at the end of the webinar. If for any reason we don't have time to get to everyone, we will make sure that we follow up with you afterwards. Next, we are going to go ahead and introduce our presenters. So we are excited to have Paul Wapner with the Aicpa joining us today. Paul manages the Accredited and Business Valuation Credential, and he supports the Forensic and Valuation Services section of the Aicpa. Before joining the Aicpa, Paul spent 7 years in public accounting, specializing in business valuation and tax. He is also a licensed CPA in the state of North Carolina and is a member of the North Carolina Association of CPAs. Paul completed both graduate and undergraduate studies in accounting at North Carolina State University in Raleigh, North Carolina. Next, I would like to introduce Erin Lively. Erin holds a master's degree in teaching and has taught classes on accounting, personal finance, and principles of business. In the past, he has spoken at various conferences on personal finance, worked as an accountant, and managed a mortgage company. Erin is currently the regional valuation consultant at Sageworks, where he works with finance professionals to help increase their valuation efficiencies. All right, Paul, we're going to go ahead and turn it over to you to begin.
Okay. Thank you for that warm introduction, Jessica. It's my pleasure to be here today and to present to this audience. I'm sure you can all tell from the title of this webcast that we're going to talk about growth in business valuation services. Business valuation is an exciting specialty in my opinion, and there are two distinct types of growth I see in valuation. The first is growth in the market and demand for valuation services, and the second is the potential for you to win business from existing opportunities. I will try to address both types as we get further into this presentation. Just to quickly qualify myself, I spent 7 years in public accounting, including 2 years of business valuation and litigation support services. My firm specialized in family law engagements, therefore most of my assignments included detailed valuation reports at fair market value. I actually got started in business valuation quite accidentally. I joined the firm for a tax position, and the day that they offered me a BV role was my very first exposure to the specialty. Since joining the Aicpa over a year ago, I've tried to help educate new and young CPAs about the benefits of the BV specialty. I hope that they might be exposed in college or at an earlier age than when I was in my career. At the Aicpa, my primary responsibility is to manage the Abv Credential, the Abv exam, and the educational pathway to the credential. Before I get started, I would like to say a few things about the Forensic and Valuation Services section of the Aicpa, or the FVS section. Our membership section is an add-on to Aicpa membership. We provide free tools and resources to help serve your clients and grow your practice. We also provide discounts on workshops, CPE education, and conferences such as our annual FVS conference. Actually, the FVS conference is only a couple weeks away. This year it's being held down in New Orleans. Many people don't know that non-CPA associates, such as attorneys or judges, can join our section. Our specialty credential holders, including the CFF and the ABV, are automatically included in the section. On our very next slide, Jessica is going to provide a poll question for you.
All right, thank you, Paul. So our first poll question for today is, are you a member of the Aicpa FVS section, which includes ABV and CFF credentials? The options there would be yes or no. And I'm going to go ahead and give everybody just a minute to select their response. All right, just a few more seconds here. We still have a few more selections coming in. All right, I'm going to go ahead and close that poll. And currently, we have about 20% of the audience poll that is part of the Aicpa members. So I'm going to go ahead and turn it back over to you.
All right. Thank you very much for taking a second to answer that question. Welcome to those people who have already joined. I hope that the rest of you who may be interested will give us a look, take a look and see at all the opportunities that we have to offer. I put this slide up here. We call this the wheel for the Abv Credential. It's offered to the AICPA members who specialize in business valuation, and I did include this one because it shows the 5 practice areas that we divide our services into. Most of the AICPA resources and education are divided up between these 5 categories. So what we'll talk about today are tax-related valuations, advisory services, dispute and litigation services, Aesop'S, and fair value measurements. As previously mentioned, I'll be discussing growth within the 5 disciplines of business valuation. I'll also discuss some general opportunities within the specialty. And to close, Erin will discuss common challenges and changes ahead for valuation analysts. He will finish with a section on how to optimize your business valuations for efficiency and results. So I think it's safe to say that most of you listening today are interested in growing your practice and retaining your clients. The accounting firms I used to work for encouraged everyone from staff to partner to focus on revenue growth. It doesn't require an equity interest to care about billing. The first statistic up here is from an IBIS World Industry Report. It shows almost a 3% projected revenue growth over the next 5 years. This growth rate is actually pretty similar to general accounting. That number is not through the roof. But on the next line, we do show that business valuation services have a 60% higher profit margin than generalized accounting services. I think this number is important. It's based on their industry data, and I think it's a result of, one, is higher billing rates. Someone who specializes in business valuation can demand a higher price from the market. And 2, there's a tendency towards smaller accounting or consulting firms, which may result in lower overhead. Either way, growth can be considered both on new opportunities, but also just on higher profit, and I think this is a great industry for that. One of our internal surveys last year, annually the AICPA does a compensation survey. Our results showed that specialty credential holders, which includes the ABV or the CFF, earned almost $27,000 more annually in gross compensation. Again, I think this is a function of the higher billing rates, but it is something that makes this field very attractive. The last thing that I've put up on the slides is a statement that says, don't refer out your clients. Anytime that you send a client to work for someone else, there is a risk that you could lose that client. Tax and audit services are generally viewed as an annuity, as a guaranteed revenue stream, and we don't want to send them somewhere else and perhaps lose the tax or audit work that we currently receive. One caveat there is please keep in mind the Code of Professional Conduct. We do need to be competent in the services that we provide. We need to consider, do I have the training, the expertise, or maybe the credentials to service my clients if I'm not going to refer them out. And this will actually lead us to the second poll question from Jessica.
All right, thank you, Paul. Our next poll question is, have you ever referred out a client for business valuation services? The responses there are yes or no. And we'll go ahead and give everybody just a minute to answer. All right, we're going to go ahead and give you just a few more seconds here. Okay, I'm going to go ahead and close that, and then I'll share the results. We're about half and half. So 48% have and 52% have not referred out a client for business valuation services.
Okay, well, thank you very much again for participating. I think that's pretty interesting. I think that does show that there's a need for training, there's a need for developing expertise for these services, and I think there are some rewards that can be had in doing so. One of the buzzwords, I think, in the industry, and has been for a long time, is employee turnover and retention. I think that providing business valuation services is a way for employees to be happier. In my experience, business valuation was the most fun accounting service that I ever provided. I found that I got to interact with attorneys. I got to interact on a deeper level with my clients. We really needed a better understanding of the business than just a traditional tax or audit service. And also, I never reached this level, but there's an opportunity to give depositions in court and also to testify to defend one's opinion. So I think each of these really creates an interesting work product. Up on the slides, we've kind of put a comparison up of level 1 and level 2 type services. I think we're all familiar with tax and audit being a compliance-driven service, whereas future-oriented or value-driven work may be more of an example of business valuation. I also put up financial planning or benchmarking as just some examples of that level 2 work that we find employees might enjoy more. I also put up a stat. This is from our internal database that 32% of our CPA Abv Credential holders are age 60 or above. We all know that CPAs don't retire, but at some point these men and women are going to want to transition their practices, whether it's through internal or external means. If we get the training and develop the expertise now, then we can be in a position to take over this business when the time comes. The last portion I put up on the screen is something that I've kind of forgotten about since I joined the AICPA, and that's tax season. Once you get away from traditional accounting services, there is some reduction of that compression. In my experience, we were busy all year round, but not to the extreme that we found around the various tax or audit filing deadlines. So what's driving the demand for tax-related valuation services? I think the biggest would be that our baby boomers are reaching age 65. I think everyone on the line has seen or heard at least one statistic about this. The one that I pulled was from the Pew Research Center that says 10,000 per day will be reaching age 65 for the next 16 years. This generation will need to transfer its wealth, and they will do that through the estate and gift tax planning, income tax planning, and potentially charitable contributions. I think CPAs are in the best position to take advantage of this work. We all know that CPAs are the trusted advisor. We have already developed relationships with our clients over many years, and we are the first person that they're going to turn to when providing this type of service. In the market, we'll be competing with business brokers and other non-CPA valuation analysts, but we should be their point of contact, and we should be working for them to come to us first so that we're not referring out this business. And so what comes to mind when you mention business valuation for tax services? I'm sure estate and gift is the first thing on your mind, right? Well, valuations can also be required for income tax purposes. This is less common after previous changes to the goodwill and amortization rules, but they can be used sometimes for purchase price allocations, and valuations can also be required sometimes for S-corp conversions for planning for the built-in gains tax. The IRS requires a qualified appraisal for any charitable contribution over $5,000. This can come into effect if you are giving away an equity security or other business interest. I put family limited partnerships up on here, not specifically because they're a type of tax service, but because they are a very common vehicle used in tax planning, and they have some unique characteristics to be used for transferring wealth. It's important that a valuation person understands the tax implications and not only the valuation issues. And I think this puts CPAs at a unique advantage over business brokers or a non-CPA valuation analyst. I think it's important to work closely with your attorney to understand the legal rights and ownership characteristics. These nuances can have a large effect on any valuation discounts or adjustments. So over in the world of advisory services, what's driving the growth here? Well, I'm not an economist, but we do see lots and lots of reports showing positive information. Some of these transactions that require advisory services are driven by market conditions, such as access to credit, corporate profit levels, and buyer and seller confidence. I've listed an IBBA market poll survey, an IBIS World Report, and an Ernst & Young Capital Confidence Barometer. I believe you could head to any source of economic data, and you will find that 2014 is looking good for merger and acquisition activity, divestitures, and other transactions that would require advisory services. I also wanted to point out that the SBA requires an independent and qualified valuation for most of their loans. So what about the baby boomers that we mentioned just a couple slides back? I think that would also be driving a significant amount of this work. Not all baby boomers are looking to transition their businesses within the family. I think many would want to sell them on the open market or use some other vehicle to transfer that wealth. And advisory services are a great way to take advantage of this. So what are the transactions that are backing advisory services? There's some examples on the slide that are pretty obvious. Mergers, acquisitions, divestitures. Many people may not think about IPOs or bankruptcy, but those are opportunities for valuation, and also succession planning and sale planning. I hope that your clients are coming to you for this type of succession or even retirement planning. I want to just tell you a quick story. At my last firm, we had a client who had a fairly profitable car repair business, and they came to us, late February, early March, asking for a corporate tax extension, and they told us they had sold the business the year before. Now, I know some of you might say, well, why didn't they come to my CPA? Why didn't they come for tax planning? Why didn't they come for maybe acquiring a better sale price through a little bit of advisory work? I'm more concerned that they didn't come and we lost out on the revenue, so that it turns out that they didn't know that our firm provided business valuation services or transaction advisory services. And I think it's really a shame to miss out on revenue because we haven't informed our clients of all of the services that we can provide for them. The third bucket that I want to talk about are for dispute or litigation services. My background being in divorce and family law, that's probably the most common dispute or litigation service that a CPA analyst is going to get into. A lot of people get started in divorce and then work their way into other types of litigation. Dispute or litigation can be very lucrative for a CPA. It is possible that valuations have multiple valuation dates, which would require running multiple models or reports. A lot of these services come with consulting needs or other pieces to go along with the valuation. Dispute or litigation services are also an opportunity to testify in court. These can bring the potential for very high billing rates. My boss once told me that he actually had the lowest rate of some of the experts in town, but that because of it, the attorney always put him on the stand last. So he got to bill for a full day at his rate rather than just a couple hours at some of the other experts' rates. There's anecdotal evidence in the marketplace that the divorce rate in the United States is still between 40 and 50%. We know that these rates fluctuate with the general economy, and part of the reason why is that divorce is expensive. I did check, the CDC puts the current divorce rate at 3.6 for every 1,000 people compared to 6.8 marriages. So the evidence is still there that divorce is very common in the United States, and spouses who have business ownership interests may be looking for our services. Beyond family law, dispute or litigation services occur in damages cases. These can be either individual or commercial damages, and we also see these type of engagements during shareholder disputes. We all know that we're in a highly litigious society, and I don't believe that this opportunity is going away anytime soon. I think there will always be a need for experts in this area of the market. And I'll ask Jessica to put up our third poll question at this time.
right, thank you, Paul. So for our third poll question, it's going to be, in which practice area were you first exposed to business valuation services? Tax, advisory, dispute, litigation, or other? And I'll go ahead and give everybody just a minute to respond. All right, just a few more seconds, so if you haven't chosen a response, please do so now. Okay, I'm going to go ahead and close this poll. We have 32% of the audience with tax, 39% with advisory, 14% at dispute and litigation, and then 20% at other. So I'm going to go ahead and turn it back over to you, Paul.
All right, thank you very much. Those are definitely in line with kind of what I was expecting. We do see that tax, we see mergers, acquisitions, and sales, and also divorce as being the common methods that people get into valuations. The last two areas that I want to discuss, which will be Aesop'S and fair value measurements, as our poll shows, are less common in CPA firms of the size that are attending this webinar today. Demand for Aesop'S, I've wanted to highlight this area less because Aesop'S are growing or that we find that there are more Aesop'S on the marketplace. And I want to talk about this more because it's a very specialized niche, and that a qualified appraiser could really build a book of business within this area. We do see an aging population which has the potential to increase Aesop'S. We do see a favorable capital market, which may cause business owners to want to transition. So there is a potential for growth, but not nearly to the level of the previous services that we've mentioned. Aesop'S are good because evaluation must be performed annually. So they do kind of create an annuity stream for a qualified appraiser that wants to specialize in this area. Now, I'd like to reference back again to the professional standards and make sure that an appraiser is competent in performing evaluation for Aesop'S. They're subject to additional rules from the Department of Labor and really can be a specialized service. Fair value measurements is another area that is not so much that the work is growing, but that the opportunity for a well-positioned or a well-trained analyst is really there. In previous years, this was a growing area, but what happened quite recently, if everyone is familiar with the small company gap rules, or the AICPA calls it the Financial Reporting Framework for Small and Medium-Sized Entities. These rules recently changed financial reporting requirements for non-public companies. So fair value measurements are now more limited to public companies, subsidiaries, or any entities that may be acquired or go public in the future. I do want to put up that there is a demand for qualified appraisers. The PCAOB has increased scrutiny over fair value measurements. Their reports have found that audit deficiencies are increasing across the board, and actually many of these audit deficiencies are being caused by fair value measurements. So they have found that the auditors aren't doing a great job of auditing fair value measurements, and they're finding that management or third-party preparers aren't doing a great job of preparing these valuations. So I think that we will see some pretty big changes in the market coming in the next couple of years. The PCAOB is pushing for change on the audit side and on the preparation side. So this is an opportunity for a CPA who wants to practice in this area. Now that we've had an opportunity to discuss the various practice areas and the factors that are driving growth, I'd like to briefly touch on what to do next. How do you take advantage of the booming growth in business valuation? I've provided 5 key areas, and when I'm finished, I believe Erin will expand on the 5th. If you haven't already done so, join the FES section of the AICPA. We have valuable resources, such as a practice management toolkit, which will help you build and grow your practice. We also have an SSVS1 toolkit, which will help you comply with the AICPA evaluation standards. Get a valuation credential. This work is going to come from referrals from your clients and from attorneys. A credential shows that you have the education, experience, and knowledge to help your clients. Credentials are part of the qualified appraiser definition used by the IRS and the Small Business Administration. Lack of a credential has been cited by the courts as a factor in assessing penalties. Communicate with your clients. We all remember one of my first stories. Most work comes from referrals, and your clients can't help you if they don't know what services you provide. Attorneys can refer you business for estate and gift taxes, charitable contributions, mergers and acquisitions, bankruptcies, divorces, and more. Almost all of the valuation services we discussed today could come from an attorney. We could spend a week on marketing to attorneys. It's that important. Jessica told me before this that they did a presentation last month on marketing. I don't know if you can obtain a recording of that from her. Finally, I think it's important to improve your internal resources and methods. By this, I mean you need a BV library. You'll need access to certain databases and research sources to properly complete evaluation. You'll also need a model and a report template to build and modify as your business grows. My very first BV assignment actually wasn't really an engagement at all. We had a standalone Excel model and a couple versions of Word reports. Each time we worked on evaluation, we had to manually update the report files for any and all changes to the Excel model. In a litigated divorce case, changes could be made on a daily basis, and our reports needed to be updated constantly. Therefore, my first job was to combine the Word reports into one template, which could be quickly modified to handle any type of engagement. And second, I had to build permanent links into the Word report, which would be automatically updated each time the Excel model changed. I had to be very careful throughout this process. My partners were very concerned about maintaining the integrity of the data and the format of the reports. It was very important that the formulas and cells in the model were never changed to ensure accuracy. I spent weeks on this assignment with many rounds of review from the partners. In the end, we invested a significant amount of time and billable hours in a process that honestly looked a lot like the Sageworks valuation solution. I do think a solution such as Sageworks is important. It can streamline your valuation report and make sure that your engagements are profitable. More time spent on client work can lead to higher realization and happier partners. So with that, I'll hand you off to Erin. He will discuss more ways to streamline your operations and to take advantage of the growth in business valuation services.
Thank you, Paul. I appreciate your both time and insight today. It was very valuable for me, and I'm sure for the people on the webinar. Just to touch on something really quick, if you would like a copy of that marketing webinar, please just go to our website, and you can find that on demand on our website. And then before I get started with my part of this, Jessica is going to have one final poll question for everybody, so she'll do that now.
All right, thank you, Erin. I'm going to go ahead and launch this here. So the question would be, are you currently offering valuation services within your firm? And the response would be yes, no, or that you're currently outsourcing them. All right, I'm going to give everybody just a few more seconds to go ahead and get that answered here. Okay, and I'm going to go ahead and close that. And it looks like about 57% of you are offering it, 34% of you are not, and 9% of you are outsourcing your valuation work. I'm going to go ahead and hide that, and then Erin, I'll go ahead and get this pulled up for you to go ahead and begin.
Great. Thank you, Jessica. I appreciate everybody's time today. Hopefully, what we hope to gain by doing this today is to give you some insight into what others in the industry are talking about and give you some insight into the hundreds of calls that I make weekly to professionals in the industry. I'll be focusing on today some of the challenges that people bring up to me when it comes to doing valuation work, some of the things that they talk about when it has to do with changing their current model of business, and then some success stories from people who are currently working with me or other folks in the industry, and just show you kind of what that looks like. One of the biggest problems that I've seen with firms right now is that they're just too busy for taking on these additional services. A lot of times they're having to outsource or turn away business because they just don't have time to make any kind of changes. So what I tried to do is figure out, well, where are people spending their time currently? And what I found is that a lot of people I talk to are spending their time on current clients, providing type 1 services. They're spending a lot of time recruiting new employees and then training those new employees. They're working on fixing their own internal systems, such as Word and Excel, like Paul was talking about. And then also just office administrative things, making sure that their internet is turned on and all of those things. The problem with that is that none of those things are things that will help your firm grow. Yeah, it's great to have all of those things in place. It's great to work with employees. But what you should really be focusing on, or what I've talked to people about focusing on, is how are you going to grow your firm? And that's why everybody's here on this phone call today. As people talked about earlier in one of the polls, 48% of you have referred out clients for valuation work. That's 48% of you that have given away a revenue stream. So, are you one of those people who are passing off clients? I hear firms every day tell me that they have their current clients come to them and ask them to do valuation work, and they just don't either have the time or the infrastructure to capitalize on that work. So what they do is they outsource that to another firm and hope that those clients will come back to them after they've passed them off. You know, I consult with my clients every day to tell them that they should stop giving away their revenue and stop giving clients to firms who haven't done anything to secure those relationships or to bring on that new business. So in the next 10 years, it's projected that there will be $7.4 billion in revenue generated from valuation work alone. 75% of privately held businesses are expected to be put up for sale during the next decade, and there is currently 25,000 CPAs involved in business valuation. That being said, most firms that I talk to are trying to get to a place where they can differentiate themselves, but they're not sure how to do that. There's a lot of things that are out on the market now to help them do that, but everybody's kind of in an unsure place right now, and they're not sure exactly how to take advantage of this market. So in the past, firms have viewed valuation as a pretty small niche market, and it's something that's been in addition to a lot of their type 1 services. They do tax work, they do advisory work for their clients, but they haven't seen valuation as a main revenue driver for their firm. That being said, when I talk to firms every day, they tell me that valuation work goes anywhere from $5,000 to $35,000 for a valuation report. That means that if you had 20 valuation reports in a year, you're looking at revenues of $100,000 to $700,000 a year, which in my mind is a lot bigger than a small niche. And that's for somebody doing a very small amount of valuation work. So the current process that people are using, I would say a large percent of the time, people are just using something that they built in-house, like Excel, Word, like Paul talked about, where they have to build that system out, make sure that everything's correct. If anything changes, they have to go in and change their entire system to accommodate for changing things in the market. And usually, one person in the firm owns that process. You know, there's a partner in charge of valuation. They own the internal process. They created the Excel spreadsheets. They know how it all ties together, which can be problematic because when you bring on new employees, or let's say that partner leaves the firm, you're kind of stuck without any backup plan. You have nothing to go to now. So somebody's got to come in and recreate your entire process for you. So if you have any kind of upheaval or change within your firm, it's very problematic. I know change is scary because it's unknown, but what we've tried to do is talk to people about what can you put in place that is applicable for anyone who comes into your firm, and how can they utilize those types of technologies. Technology 10 years ago compared to today was a lot different. There was no Facebook really. There was no Twitter. Things evolve, and you reach out to your clients in different ways, and you have to evolve if you want to take advantage of a growing market. So there's this old story about a man and his son, and the man had been doing accounting work for 20 plus years, and his son just graduated from college. And his son graduated from college and was using technology and came to work for his dad. And his dad told him that he didn't need any of his technology because he's been doing accounting work for 20 years and he can do it just as fast as him without any help. So the son challenged him to a contest to see who could do accounting work quicker, and they both did the work, and after about 20 minutes they finished at the exact same time. And the dad said, I told you I can do this work just as fast without any technology. But the son pointed out to him that he did the work just as fast as him with no experience. So the point to that story is that speed of business is always going to be moving at a faster pace, and you need to be able to provide the same level of service and efficiency while taking into account that faster paced business. So one thing that I've seen in all of my experience, I've worked in the mortgage business, I've worked in accounting, I've worked in home improvement, is that every business owner I've ever talked to wants to make more money. And I assume that everybody on this call is in that same position. So how do you do that? The people that I talk to differentiate themselves from the crowd. So they need to find ways to make themselves stand out amongst the crowd. And what we've done at Sageworks is we've tried to provide a tool to allow firms to focus on revenue-generating initiatives by taking out the time that it takes to do the work that you're already doing. If you're not out there prospecting new clients and you're not calling on people to try to find new business, then you're destined to keep the same amount of business that you have right now. So why do Excel and Word and those things not work? Well, the problem is that in order to take advantage of business or do your work faster, you need to be able to increase your workflow, meaning you need to take mundane things out of your workday and make those things happen quicker. Basically, when I talk to people, they tell me that full reports are taking them over 40 hours. Summary reports can sometimes take them over 20 hours. And if you can save time on those current clients, it'll allow you to have time to go out and get new clients. And like Paul stated earlier with the Word and Excel, if you're taking time double-checking your work, going back through, changing processes to fit each client individually, that's time that you don't have to go out there and get new clients. So with technology, think about your daily life. Everything in your life is moving towards more technology, and the reason for that is because technology improves efficiencies. It allows you to do things quicker. You can check your email on your phone. You can do that when you're on your way to work in the morning. Technology makes your life more efficient. So in addition to that, say you bring on a new associate in your firm and you want them to get up to speed quickly, they can learn from what other partners have done or other more senior members of your firm have done in a very quick way because it's already been laid out in a tool or in a software package or a platform so that they are able to take advantage of what other people have done before them. Paul stated earlier that BV firms are reporting 60% higher profit margins than typical Type 1 service firms. So firms need to be looking at that now if they want to take advantage of the opportunities that are going to come in the future. If you don't have the time to set those things up, it's going to be really hard to catch up once that business is rolling in. So in our world today, you all know that people want their information and they want it fast. You know, people go on Twitter to find their news now. They don't go to a newspaper. They don't wait for tomorrow's news to come out. They're on Twitter 24/7 trying to find out what's going on in the world. So it's a quicker population of people who just want information fast. So you need to be able to turn out these reports quicker, more efficiently, and by using technology, you can use that to win business. If you walked into a client meeting today with a paper and pencil, they'd probably laugh you out of the building. So what we're talking about is that's where things like Excel and Word are going. It's like a paper and pencil. It's been around for 15 years and technology has changed. So people have come out with softwares for doing valuation work. The problem that people are telling me that they've had with those softwares is that they were very basic, they were very constrictive, you couldn't manipulate any of the data, you had to do their report, not your report, and it was very cumbersome to work with those products. So Sageworks has built a tool using SSVS1 as a standard with continual support to stay compliant in the changing environment. So you don't have to worry about, is this compliant, is it not? It is SSVS1 compliant. It's the only professional-grade cloud-based tool for doing your valuation work with the ability to add as many users as you needed, so you don't have to pay per seat. You can just add new users to the tool. We also provide a report writer that allows you to build templates and reports into the tool to eliminate duplicate work and get new employees up to speed quickly. And it also has built-in sections for other adjustments. So if you had something that isn't already outlined in the tool, there's other adjustment sections like pass-through entities and those types of things that you can put into the tool to allow you to build out the valuation that you need to. And then finally, it has a document manager to stay organized. It has data feeds that pull information straight into the tool and automatically pull it into the valuation. So my current clients that I work with are telling me that this tool is saving them 6 to 10 hours per engagement that they get. I base everything on a 20 engagements per year, just as a rough estimate. And what that would mean to your firm is that you would have 200 hours saved per year. Think about if you could have 200 extra hours in your year, what would you do with those 200 hours? My clients are going out and getting more business and getting more consulting engagements and bringing on new revenue streams. And they're having tremendous success with the tools. So to kind of sum up, you want to maintain compliance. You want to automate your workflow, improve efficiencies, and increase your competitiveness. What I've seen with people is that if they don't have the time to change now, they probably never will, and things are only going to get worse for them. There's a quote by William Pollard that says, "To change is difficult, not to change is fatal." And I don't think that that is putting it lightly. Most firms that are refusing to change are not going to make it in the next 10 years. If you can position yourself now as a leader of tomorrow, then you'll be ready for that change as it comes. Business moves really fast, and if you don't take advantage of that now, you can miss it. I appreciate everybody's time today, and I hope this was beneficial to you, and I'm going to turn this back over to Jess.
All right, thank you, Erin. That was really great. Before we move on into the resources that we have available, we do have just 2 final poll questions that I would like to ask everybody. After hearing what both Paul and Erin had to talk about, the next question would be to see if you're interested in learning how the Sageworks valuation solution would be able to help you with industry growth opportunities. And I'm going to go ahead and give everybody just a moment to answer that. All right, we still have a few responses coming in, so I'll give you here just about 10 more seconds. All right, I'm going to go ahead and close that. And then secondly, I know that many of you on this call are interested in learning more about valuation, so I wanted to see if you were interested in learning more about the AICPA membership and how you could become a part of that, and also find out, what your peers are doing and how successful that can help you, again, with industry growth for business valuation. So I'm going to go ahead and give everybody just a moment here to select their response. All right, just a few more seconds. Okay, I'm going to go ahead and close this poll. Okay, so up on your screen, you should be able to see the valuation resources that are available to you. We currently provide and research and try to find, different ways that we can help accounting firms, valuation firms with increasing their valuations, having better efficiencies within their firms. And so the content that we provide, we do it in ways such as articles, infographics, checklists that you can use with your clients, and in ways to just show you how to optimize, business valuations in your firm and just how to be more successful with offering them. So if you didn't download the slides at the beginning, I will be sending an email at the end of the webinar that will provide the slides, so you'll be able to have access to each of these links. And then finally, I'm going to keep Paul and Erin's information up on the screen while we do go into some Q&A. We did have quite a few questions that have come through. If anything was more product-specific on the valuation, I will have Erin follow up with you specifically after the call, just because that can tend to be different within each firm. But Paul, are you still there?
Still here.
All right. Well, let's go ahead and just move into the Q&A. One of the first questions here is, the business valuation market is very competitive today. Where are you seeing growth? And given that fees are also more competitive today, where do you see the growth going?
Based on interactions that I have with members, I do see the growth really in those two avenues. So one is in new services such as estate and gift tax planning. So I see that coming, new services from clients. And I also see it in getting more specialized. So a lot of our volunteers are getting, we have some that are highly specialized in Aesop'S. We have some that are doing industry specializations. So obviously healthcare comes to mind. So that's what my members are telling me the growth is going. In response to fee pressure, I think that kind of speaks to how technology can assist a firm. One approach is to differentiate that if you're the best in the business and people want your services, they'll pay for them. The other is that if you can drive efficiency in your firm, do the work faster than somebody else, then you can maintain a profit margin despite that fee pressure.
Perfect. Okay. Are business valuations something that a sole practitioner firm can get started in if they have no prior experience or training in this? And if so, what would be one of the best ways to start and offer these services?
I would say definitely yes. And there's a couple ways to get started. One is to network with the attorneys. Maybe offer to review a valuation report for free or at a limited cost. Get to know the attorneys, provide feedback on some work that their experts are doing, show them that you know the work. The second I would say is to look to your existing client base. Look to those clients that are going to need an estate tax return or that are going to sell a business or have some M&A activity. Even to get started, offer them just to provide them with a ballpark number of what their family business is worth. Just to, for planning purposes. You don't need to do a detailed engagement report. You're not going to be on the witness stand for a litigation service. So I think those are two places to look in order to get started.
Okay. The next question was, if you have a CVA, do you need an Abv credential?
I don't think the answer is clearly yes or no. To me, the Abv credential is the one that I hold, and it's offered by the Aicpa, which is my membership organization for CPAs. The Abv is currently the only credential that requires a CPA license. I know that the NACVA changed that back in April 2013. A lot of the work that our clients are doing is coming from their existing client base. We talk about the CPA as a trusted advisor. So I think having the Abv attached to the CPA is really a great mark to show that you're their trusted advisor and you have this expertise and specialty in business valuations.
How would I go about approaching an attorney to refer work my way?
I think there's a lot of answers to that. One is to attend networking events, host a breakfast at the Bar Association. I think there's a wide range of answers to that. The Aicpa, we've got a marketing toolkit that I think responds to that. I'm not sure what your webinar content was from last month, but it sounds like that may be very useful. I think there's some very basic approaches that'll work, and the basic is the networking. Attorneys tell us, we have guest speakers every once in a while that are from the legal field, and they say oftentimes they call the person that they talk to last. They may not be calling the flashiest or the best valuation analyst, but they remember the last person they talked to, and oftentimes that's who they'll call.
Okay. And for those of you, if you are interested in learning more, we do have 3 prior webinars, 2 that we've done on marketing specifically for accounting firms, and 1 on targeted networking. So if that's something that you're interested in for any type of service, especially for valuations, please feel free to shoot me an email, and I can make sure that you have a copy of that to help you get started with providing valuations and where to go. And then, Paul, one other question here is, how come an aging population could drive an increase in demand for Aesop'S?
Sure. It's really the population of the owners. So an aging owner is more likely to set up a new ESOP in order to transition or sell his business. And that's what I was referring to.
Okay. And then the last question I have here is, how can I obtain an Abv credential?
Sure. You'll want to visit our website. It's aicpa.org/FVS. It's actually up on the screen. And there you will find all of the credential requirements. The Abv has an education requirement, an exam requirement, and also an experience requirement. So you would need to complete all 3 of those in order to obtain the credential.
All right, thank you, Paul. That is all the questions that we have. The remaining questions are a little bit more product specific, so if we didn't get to that, I will make sure that Erin follows up with you after the webinar. For those of you that did say you were interested in learning more about the Sageworks valuation solution or the AICPA membership, again, we will make sure that we have somebody follow up with you after the webinar. Most likely will be Erin and Paul. And then we will be sending out a follow-up email where you will receive the webinar on demand, so that way you can view it again at any time or share it out with anybody else within your firm that maybe wasn't able to join today. We also will include a link to the slides, which then will also have the links included for all of the resources. Again, if you're interested in learning more about marketing and how to do networking, we have Bonnie Russick and Nancy Fox that have hosted those webinars for us in the past. Both are very high thought leaders in the accounting market and have worked with thousands of accounting firms to help them become more successful in their marketing and networking efforts. So I'd be happy to share that with you as well. I'd like to thank Paul and Erin for your time today. That was some really good insight, and clearly there's a need for how to go about industry growth for valuation opportunities. So we appreciate your time today. Should you have any other questions, again, please feel free to shoot me an email, and I will make sure to get you to the appropriate person to get it answered. Thank you, everyone, for your time today.